Fundsupermart.com.
Hi Sui Jau, can you tell us a bit more about the Wise at Fundsupermart program?
The concept of WISE is actually we want investors to see investing as similar to, for example, savings, putting the money into a fixed deposit savings. And one of the key differences that we feel when it comes to unit trust is they see unit trust as something that has risk. So it's very hard to see as synonymous with savings. And one of the key reasons for that is not just the volatility, but unit trust actually comes with a sales charge. Bond funds typically has a sales charge. It could be a low one, maybe 0.5% for banks, etc., maybe higher, but ultimately there's still a sales charge. So when investors place money into, for example, a bond fund, then what happens is that because of the sales charge, is immediately negative. Maybe it's down 0.5% or 1%, and then they have to wait for maybe 3 months, 6 months, or maybe even longer before it finally breaks even, and then it starts to make money for them. So what we have done for WISE is we have actually lowered the sales charge of 51 of these WISE funds, which is fixed income funds, all to 0%. So then that means that investing into these WISE funds become a lot more similar to putting money into savings, because you can actually start making money from day one onwards immediately already. So with that, we actually also hope that, and then because we remove this particular aspect of investing into fixed income funds, then investors will start to see a lot more similar to putting money into, for example, fixed deposits and savings, because they can actually immediately start making money instead of having to wait, even if it's 3 months or 6 months before it breaks even.
So how can investors make use of this new Wise initiative?
We've actually set up a portal. It's something like a separate web page from Fundsupermart. It actually has a lot of very informative pages within it. So it actually does talk about the various basic educational aspects about bond investing. Then, for example, also some of the risks, different type of bond funds there is, and also some of the risk features, etc. Then within each of these 51 funds, we actually have detailed fund write-ups of all 51 of the funds, so that when you go inside, you can actually see, all right, what is the fund manager doing? Currently, what is the fund investing into? And so you'll be a lot more clear about the unique or distinct aspects of each one of these 51 funds relative to each other. So we hope that with this, actually investors will have a lot better idea and education with regards to what they are investing in when it comes to bond funds. And then hence, they will have the confidence to actually go into bond fund investing, because generally I would say that bond funds are very different from equity funds. The volatility is much less, so they are a lot more similar to putting money into your savings as well as fixed deposits. Although up till now, I think a very common misconception investors have is once it's talking about unit trust, it's risk, and then they want very high returns and they think it involves very high risk, which is actually not necessarily true when it actually comes to bond fund investing. In fact, a lot of the bond funds performances over this last 6 months have been a lot better than the equity funds, because equity funds was hit by some volatility from the Euro debt crisis, whereas bond funds just kept on chugging along.
So what is the process for gaining access to this Wise fixed income funds at 0% sales charge?
Once you go to the fund's website, you can just invest normally, and automatically, as long as it is a WISE bond fund, you will be given 0% sales charge when you buy into them. So you don't actually need to specifically notify, etc. You just need to be aware that, okay, the bond fund that you're investing in is one of these 51 bond funds, and the 0 sales charge will automatically be given to you.
So do you have any of these Wise fixed income funds in your personal account?
Yes, I actually do have some. I actually have a fair number of funds. So amongst them include a short duration bond fund, which is in WISE, the Nico AM one. The other one would be a high yield bond fund, which is by Fidelity. And at one point in time, I had the Aberdeen Asian fund as well. A bond fund is an Asian bond fund, shorty, they call it for short. But last year, what happened was that I shifted into equities because I was more bullish equities. Going forward, eventually, when the market rebounds to a certain extent, I will actually look towards rebalancing a little bit more towards bonds. Because right now, I'm heavily overweight equity. So, but having said that, I think it is an important part of diversifying one's portfolio. So I do have bond funds, and in fact, for my wife's portfolio, a significant portion of it, I actually advise her to put inside bond funds because she's the type that's totally not interested in investments, and she might not, be able to handle seeing suddenly all her investments go deeply into the red if there's a big market crash. So what I told her is, okay, you have this X sum of money, put it inside a bond fund. But previously, before that, she has also built up the equity portion by doing RSP into the equity funds from her regular savings plans because she's getting a salary every month.
Thank you.
Thank you.